Looking to supercharge your trading with strategies that are proven to work? Well, stick around and discover the powerful benefits of breakout trading systems. Hi, I'm Jeff Swanson. I have over 2 decades of experience with the futures market, and I'm here to share with you my journey and how to help you become a successful algorithmic trader. Today is the first video in a series of videos on breakout trading systems and why they are such a powerful and critical part of becoming an algorithmic trader. In today's video, we're going to dive into breakout trading strategies, and I'm going to explain the benefits of these strategies. From reducing risk to adapting to any market condition, let's get started. Breakout strategies are momentum strategies. And what that means is we're going to be buying into strength. So here are some examples of breakout strategies, or buying into strength, as I like to say. So if a stock makes a new 52-week high, this is a real common indicator that people use to buy into a stock. Another example is buying a new 10-day high. And another example is when price crosses above a moving average. Another way to put this again is we're buying into strength. The market is moving upwards and we're going to buy into it. So these are a type of momentum strategy. So here's an example of 3 consecutive higher closes. So we have a bar, there's close 1. We can see that the close is above the previous bar. There's close 2, there's close 3, and that is our buy signal. And what we're trying to do is ride that trend. We assume that price is breaking out to some type of new high, however we define that, and we're going to ride that trend as we hope that the market continues to move in our direction. Here are the 5 key benefits breakout trading strategies can bring to your trading. Let's start with one of the biggest benefits: reduced market exposure. Breakout strategies are ideal for day trading, which means you're in and out of the market within the same day. This approach minimizes the risk of overnight gaps and unexpected news events that can cause significant swings in the price movement when the market is closed. Keeping your trades short and focused on intraday movements limits your exposure to these unpredictable market events, making it a safer approach for many traders. 2. Adaptability. Breakout strategies are highly adaptable. These strategies can be adjusted to suit the current market condition, and many of the strategies can actually have built-in parameters that automatically adapt to market volatility. Now, this flexibility makes breakout strategies robust across different market environments, which is key for consistent performance. 3. A proven track record. Breakout strategies have been around for decades, and for good reason. They work. They've been tested and refined in countless market conditions, giving them a track record of success. This proven framework means you're not just starting from scratch. Instead, you're building on a solid foundation that has already stood the test of time, which is a big confidence booster to any trader. If you're finding this content helpful, please give it a thumbs up and share it with other traders that you know. I would really appreciate it. 4. Scalability. Breakout strategies aren't limited to just one market. They can be used across multiple markets, such as stocks, futures, forex, or even cryptocurrency, and also timeframes. This versatility allows you to diversify your portfolio, spreading risk and capturing opportunities in various asset classes. The fact that breakout strategies work across different markets and timeframes is a testament to their power. Again, they just simply work. Number 5, if you're just starting out, by using breakout strategies, you're setting yourself up for success. Listen, if you're a new trader, and that's somebody who's not making money consistently, why waste your time on reinventing the wheel? Breakout trading is a smart choice, and I always recommend that new traders and seasoned traders take a look at it. Here we are in TradeStation, and we're looking at the daily chart of the NASDAQ futures. I also applied a very simple indicator, a price channel. We can see that the green line is actually a 20-day highest high, and the red line is the lowest low over the past 20 days. So we have a 20-day price channel based upon the highest high and the lowest low. If we zoom in here, what we're looking for is a breakout strategy when price breaks above this 20-day high. So we can see that this particular bar right here, it's closed above that 20-day high, and that's why we're going to initiate a long in hopes of catching a momentum trade and catching some of this profit. The red line is going to signify our exit. So if we follow this along, we can see not until way over here do we have our exit. So we got in down here and we're exiting here. Very simple concept. Let's see how to do this using EasyLanguage. Here is the EasyLanguage code. So we have our breakout input. So this is the breakout range. So we're going to tell TradeStation how many bars are we going to use in our calculation. We're going to use 20 days. This is just arbitrary. I just picked this. I didn't optimize this at all. I just simply picked it. 20 days roughly represents 1 month of trading action. We're going to define two variables, a high breakout and a low breakout, and then we're going to perform our calculation. Let's look at the high breakout first. You can see we're taking the highest high over the breakout range. Now, maybe you don't know EasyLanguage very well, but it's pretty simple. What we're doing here is telling TradeStation to look at the highest high going back starting yesterday. That's what 1 here means. So we're going to start looking yesterday, and we're going to go back 20 days, and we're going to pick the highest value and put that into here. And we're going to do the same for the lowest low over the same amount of days. So that's what's really defining the value of the green line and the red line. From there, we can simply buy when the closing price is greater than the high breakout, which would be the green line. And we can also then close when we are below that red line. That's all the lines of code that it takes to build a simple breakout strategy. Notice that we don't have any stops or profit targets or anything else. We're just simply looking at the breakout logic. But we do have an entry and we do have an exit. Let's apply this to the chart we just looked at. I've already applied it here. I'm just going to enable our strategy, and we can see our trades happening. And let's zoom in on this one right here. Here we have the bar breaking out. This bar closes above that green line, which is our upper breakout channel. And the way TradeStation default works is once that bar is closed, the trade logic is analyzed, and it's like, yes, this is true, and we're going to open our trade at the opening of the next bar. And there is our entry. And if we zoom out, we can see that we hold all the way to our exit over here. Again, we can see I have a close below that red bar. All right, it came close here, but didn't happen. It wasn't until right there we got this bar, and then we close our trade at the open of the next bar, capturing our profit. So you can see this is really good at capturing trending markets, and we're capturing these trends here. Again, this is just an example, but look at the performance report. Performance report here is showing a lot of profitable years. We have an equity curve that looks like this, rising to the upper right. We're making $192,000 on 58 trades, which really isn't a lot. Average profit over $3,000 per trade, with a average drawdown, or I should say a maximum intraday drawdown of about $83,000. Now, you don't just have to trade this on a daily chart. Let's move this over to a 100-minute chart. So this is the same strategy going to be applied to NASDAQ once again, but this is a 120-minute bar. So each bar here represents 2 hours of trading. That's going to make us have a lot more trades, and let's apply the strategy. And there you go. We can see that again, it's buying when price breaks out above that upper band and then closes below the red band or that lower band. And we can see the types of trades that it's doing. You can see again, it will chop around in some areas. None of these are perfect. But on those bigger trends, such as in here, it's capturing this over here, this one, and this one over here. And what does the performance report look like? There's the equity graph. We have some chop here for the first couple hundred trades. Keep in mind, we don't have any filters on here. We don't have any stop losses or profit targets. This is just the very basic starting point of a breakout strategy, and this is non-optimized, and it's really easy to build. We have 174,000. We're making $250 per trade, which is less than the original one, if you recall, but we have far less drawdown. Now, this isn't a trading system as I've stated before. However, this is a starting point, and it shows you the power of a breakout strategy. They work in many different markets at different time frames. So what would I do to improve this? Well, we're going to talk about that in more detail in another video. But of course, you could try profit targets. You could try a filter, some type of regime filter, so you're only taking these long trades in a strong bull market. You can try an ADX for filtering on volatility. You can also, of course, put in stops, which is highly recommended. The point, again, of this video isn't to show you a complete system, but is to show you that just a few lines of EasyLanguage code, as we saw here, can produce a breakout strategy that looks really good without profits, targets, without stop losses, or without adding any other filters. The skeleton of this strategy is solid, and you can build a fully fleshed out system just with what we have here. That really is the power of these breakout strategies. All right, it's time to look at some rookie mistakes. The first one is, why reinvent the wheel? So many traders try to build all types of exotic trading systems. And if you're just starting out, and what that means is if you're not making money on the markets yet, you're just starting out. So why don't you stick to what works? Simplify your life. Breakout systems are easy to understand, they're easy to code, and they are a proven model used by many winning traders. And so you should be giving them a try as well. Rookie mistake number 2, overcomplicating your strategy. Remember, the strength of a breakout strategy lies in their simplicity and clarity. This often means that they're going to work into the future. In other words, they're adaptable. This is exactly what we're looking for. So stick to straightforward rules and don't try to overcomplicate your breakout strategies. Following these tips will take you a long way. Today, we've explored the top benefits of breakout trading strategies, from reducing risk and the scalability, and did I say they just work? Breakout systems work, yes. And I think you should really consider them before you go off exploring other more exotic type of trading methods. Listen, if you found this video helpful, please comment and like it. If you do put a comment below, I'm going to make a point to get back to you within 24 hours, so I hope to hear from you. If you're looking for more information on breakout strategies, check out the description below this video. I'm going to have some links there and even some links to some EasyLanguage code. Thanks so much for watching. Join me and other EasyLanguage users over at EasyLanguage Mastery, where you can download free sample code, discover great trading ideas, and learn how to become a successful trader using EasyLanguage.